let the price go higher, and now you stop the ability of these countries to drain the world's exchanges, to stand for delivery the way that they are. It becomes a whole lot more difficult. So there's a whole lot that goes into this. There's a lot of moving parts, but if I had to be just plain and simple, it's the most undervalued asset on the planet, and it's the trade of a generation. I really do believe that. There are very few things I've ever seen that have asymmetrical qualities the way this does, meaning lowest downside, highest upside, and that's silver. 1,000% to me.
Before we show you more clips, smash the subscribe button. Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
Gold's actually at 2,900 as we speak. The futures are above. It was much higher. It was at 2,930 futures last night. It's off a bit, $10 down. Nothing goes straight up. We are seeing action, Jesse, in the gold market that I've never witnessed as someone who's been doing this for, I hate to say this, it ages me, for 35 years. I've never seen anything like what we are seeing. I've been talking forever, Jesse, about, at least since 2020 publicly, about the amount of physical deliveries, physical demand that has happened off of COMEX and the LBMA. There was a group in 2020 that came out of nowhere on the commitment of traders reportables. So I don't want to get too deep, but every week the COMEX market publishes what they call the commitment of traders. And it typically has the commercial banks on one side and the specs, as they call it, the hedge funds on the other side. And as one goes long, the other goes short. It shows the positioning of the largest traders. And then out of nowhere in 2020 came this third group of reportables that no one had really ever heard of, called the others, that are largely believed to be sovereign wealth funds. And we have been able to track and witness and watch in real time the stupidity of the Western suppression scheme of holding down the price of gold and silver with naked futures contracts. As an example, in silver on the LBMA, they have 300 million ounces afloat, they call it. 800 million ounces total of silver. 500 belong to the ETFs, 300 are available. Yet they trade 2.9 billion ounces per day, 3.5 times annual global mine supply. They say it's only 290 million ounces they're trading, but they say, well, that number could be up to 10 times short, underreported, because we only post the final settlement number. So you have 300 million ounces, you're trading 3 billion ounces every single day. This suppression, of which 90% plus are naked contracts, meaning no metal behind it, just commercial banks and their ability to suppress the price of gold or create an illusion or a reality with paper. And we've watched as these other banks, largely in the BRICS nations, have drained the exchanges, standing for delivery slowly, copiously, not too fast, not enough to raise the alarm, but slowly enough, drip by drip by drip, and taking it from different exchanges and in different manners to bolster their stockpiles. That's well documented. Well, if we see what's happening right now, just for example, in the month of February, Jesse, off of the COMEX market, 59,296 contracts stood for delivery on the February gold contract, far surpassing the largest record ever during the COVID crisis of 47,132 in June of 2020. In other words, that's 5,929,600 ounces of gold. Try to multiply that times 2,900 and your calculator freaks out. You get the E. It's a lot of gold. And who's got that money? Why is it all coming home? 13,735,000 ounces of silver were delivered on the February contract, 2,747 silver contracts delivered. Things are happening at a level that I've never seen. And I have an opinion on that, but I guess what I'm really trying to say is that, look, gold's up $200 plus in the last 30 days. It's up 900 in the last 365 days. It's quietly creeping higher. Nothing is stopping it. And I think that we are moving in a direction that most people don't. I would say to you, my gut is that they are intending to revalue the price of gold. They're bringing it all home. All of this gold is finding its way to the COMEX market, leaving the LBMA. People are saying it's because of the Trump tariffs. No, I don't think it is. I think they have a bigger agenda at hand, and we can talk about that. But a lot of things are lining up. as an example, and you can stop me at any point if I'm going too far here. But look, when JP Morgan paid a $920 million fine to the Justice Department, that was bad enough.
In today's news recap, JP Morgan and other big banks are flying billions of dollars worth of gold on planes. JP Morgan Chase alone plans to deliver $4 billion of gold this month, according to security filings. Trump's tariffs are already having unintended and somewhat strange economic repercussions. For example, they have led to big banks transporting billions of dollars of gold via commercial planes from London to New York City. The price of gold, which investors tend to buy during times of heightened risk, has been on the rise. Gold futures, contracts for the future delivery of gold at a set price that trade in New York's commodity exchange, have risen 11% this year and closed at $2,909 a troy ounce on Wednesday. The Wall Street Journal reports that some analysts project that future contracts could soon reach $3,000 for the first time. However, following Trump's election and his threat to impose tariffs on Europe, the price of physical gold in London has been trading about $20 lower since early December. Normally, prices in these two markets move in sync because traders can ship gold between them whenever there is a price gap. Banks play a big role in these markets by holding gold bars in London, lending them out to earn returns, and protecting themselves from potential price drops by selling futures contracts in New York. However, banks that had sold gold futures are now facing losses as U.S. prices surged above those in London. Rather than buying back futures at a loss, they have a better option: shipping physical gold from their London reserves to New York to fulfill their contracts. This move allows them to avoid losses on their earlier bets and even make a profit by selling additional gold at the higher U.S. price. This gold rush has triggered a logistical nightmare, with some clients waiting up to a week to retrieve their gold from the Bank of England's vaults. Additionally, COMEX contracts require gold bars to be a specific size, forcing traders to send their gold to refineries for recasting before shipping it to the U.S. Finally, the cheapest and safest way to transport such large amounts of gold is via commercial flights. According to the Wall Street Journal, banks are using security firms to move the gold in armored vans to London's airports.
The Justice Department ever handed out. And hang on one second. Come here. My dog, as I showed you earlier, keeps jumping on my leg and won't leave me alone until I pick it up, and it will distract the hell out of me. Sorry, she's a new puppy. Anyways, they paid the largest fine to the Justice Department ever handed out. And yet somehow they were allowed to be the custodian of the world's largest silver trust, still SLV, along with BlackRock. Well, guess what? They just took over GLD with BlackRock from HSBC Bank. And now you have JP Morgan controlling one of the largest stockpiles of silver in the world and one of the largest stockpiles of gold in the world. I find it a little interesting. At the same time, we're seeing massive amounts of gold and silver, massive, being shipped home to New York under the guise of tariffs. Now, let's go back to 2019. What did the BIS do? Reclassified gold as the only other tier one asset. So you have gold as a tier one. You have this cartel bank who's been really the center of all the conspiratorial talk forever. Now the custodian of the largest silver trust and one of the largest gold stockpiles in the world, along with BlackRock. You have all the gold and silver being shipped across the globe right now to the COMEX market. You have something called the gold revaluation account. Every central bank on the planet holds gold in the revaluation account, all of them. Now, I've talked a lot about the head of the Dutch National Bank. The guy says, let's revalue gold. We should revalue gold. You got members of the Bundesbank. Let's revalue gold. We should put it on par with its current value or higher to offset our balance sheet. Or how about Senator Cynthia Lummis from Wyoming, who advocates for revaluing gold in order to fund the strategic Bitcoin account? More and more and more people are talking about revaluing gold. How about Judy Shelton, who I just interviewed? Judy Shelton says they're going to revalue gold. Not in so many words when I asked her specifically, but she wants to have a 50-year treasury collared to gold, redeemable in gold. She said her and Trump had discussed it during the first administration. If you remember, she was his nominee to run the Federal Reserve. Wasn't confirmed. Probably will be this time, at least on the Board of Governors. They're good friends. She said, we discussed it. We discussed issuing them on July 4th, 2026, the 250th year anniversary. She said, Andy, they're going to do that. They're going to issue 50-year treasuries backed by gold. I said, Judy, well, what about auditing Fort Knox? She said, absolutely. That needs to be done. And she said, I said, what about revaluing gold? And not in so many words said, yes, it would benefit all the central banks who have been accumulating gold for the last several years. And it would definitely benefit the United States because every $4,000 increase in the price of gold gives a $1 trillion free and clear to the Treasury General account. And wouldn't even require congressional approval. Jerome would just need to be told by Scott Bessent, who would be told from Trump. Trump would say to Scott, hey, tell Jerome to revalue the price of gold. Bang, it's revalued, just like that. And if you're going to establish confidence, reestablish confidence, like Judy said, you need to peg it to gold. Use the marriage of blockchain technology, like a stable coin, and gold. Judy said to me, Andy, I hope they issue stable coins off the 50-year treasury backed by gold. How's that? Interesting, isn't it? And who controls the on-ramps and the off-ramps to all the stable coins now with all the treasury issuance behind the stable coins? Well, that's pretty much the government. So it's a way to sidestep the CBDC, have the same effect of control in and out, to peg it to gold, to revalue the price of gold, to bring it all home first. I mean, you can't make it up. As far as I'm concerned, I don't care what people say. I'll go out on a limb, and maybe I'm wrong. But Occam's razor, man, says that when all of these things start lining up, it's the most logical answer that prevails. To me, they're bringing all the gold and silver home as much as they can. They're saying it's because of tariffs. It's not. They have the biggest cartel criminal bank in the world holding GLD and SLV. All of these things, aside from it being a tier one asset and the realization that our treasury market is being forsaken because of inflation, default risk, confiscation risk, sanction risk, all of that stuff. In my mind, Jesse, that is the trend. They're going to do something with the only other tier one asset in the world. They're going to peg it to a system. They're going to use blockchain technology, a la stablecoin. And it's going to happen, in my opinion. And that's why I think all the gold's coming home. That's why I think gold is so strong. They want it to go higher. And the only question that I have is, are they going to let it do what it's been doing for the last couple of months? Boom, 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 boom. Or is it going to go bang on a Friday night, Monday morning? I don't know. But I do think, honest to God, I really do believe that there is something much bigger going on in the gold market right now that